My name is Greg Boland from Moomoo Securities based here in Sydney. We're bringing you a market update for Friday the 16th of January 2026. The market today closed up 0.26% in the S&P 500 after hitting at 69.44. Its all-time high recently was 69.86, so just short of that and well above the range it was tied to in September to December last year. Overall, 310 stocks gained and 190 odd fell. The Nasdaq was up 0.2, the Dow 0.5, with 15 of the 30 components up and 15 down. The major indices that moved in the US again today was the Russell 2000, and that index ended up 0.9% outperforming the others. So the Russell 2000 made up of 2,000 small cap stocks, and at this time of the year there's often a rotation into those small cap stocks as a result of tax selling just before the end of the year and then rebuying in the beginning of the year. So that index is up year to date 7.8%, well higher than the others that are in the sort of high 1%. In that index, more than 70% rose today. It was about 30% falling. Yesterday was a bit of a harsh day in the market. The market fell, but it was definitely put back in its place today. The market rose. The bulls took over from the bears, and the VIX got smashed back down to under 16. So the VIX is the volatility index showing volatility in the S&P 500 options. Another interesting index to watch is the SOX, the Philadelphia Semiconductor Index, and that will be really relevant when we look at some of the things we'll talk about today. That the SOX was up 1.5% today and 10.7% year to date. So in terms of reportings, this morning we had reportings from Taiwan Semiconductor. We also had ones from Blackrock. Blackrock was up 6%. Morgan Stanley was up 5.7%, and Goldman Sachs was also higher on a very positive results. Next week we have reportings again. On Tuesday, US time, we have 3M, Netflix, United Airlines, and Rio Tinto. On Wednesday, we have Johnson & Johnson and Halliburton. And on Thursday, we have Intel and Alcoa. Intel in the semiconductor spaces and tech space has been one of the highlights of the year, around 37% so far year to date. So look out for those, particularly Netflix and also Intel. There'll be interesting results. So today we'd like to focus on one of these results, which was Taiwan Semiconductor. The whole premise of an AI bubble sort of bubbled to the surface, if you like, between October and November last year, pushing the market lower. So AI is dead, long live AI. That was the premise that really came out today. Taiwan Semiconductor makes advanced chips for the likes of NVIDIA, one of their biggest customers, and the share price surged 4.5% overnight. Why did it do that? Well, revenue growth in 2026 was high, and it gave guidance of that being 30% higher in its result. It has capex plans of spending an additional 56 billion in 2026, which is 12% higher that year to date. The biggest thing really was that it's a very, very strong endorsement for the AI sector, and that's why things like the SOX, the ETF SOXL, SOXL, were much higher today because of that. The CEO dismissed bubble fears, and they stated that their compounded annual growth rate will be in the high 50% right through to 2029. So this really calmed fears of overspending in the sector and boosted the stocks like NVIDIA, ASML, AMD, and obviously Taiwan Semiconductor as well. So these major contact customers, NVIDIA gained 2.1%, ASML 5%, and AMD 2% today as a result. So what I'd like to do now is focus on one of these stocks, which is ASML. So in terms of the tech sector, it can be divided into different subcategories, and one of them is obviously semiconductors, the likes of NVIDIA, the likes of Broadcom, the likes of Taiwan Semiconductor. But there's also a range of semiconductor equipment and material makers, and that sector was up 5.3% today. And one of the stocks outstanding, or the highest in terms of capitalization, it's got a capitalization of 515 billion US dollars. That stock is ASML Holdings. ASML Holdings engages in the development, upgrading, and servicing of semiconductor equipment, and a great stock in terms of the year-to-date performance. So we look at that semiconductor equipment and materials sector. ASML is the biggest by capitalization, up 5.4% today and around 24.5% year to date. Given it's only the 16th of January, that's a huge increase. And the other stocks in that sector also are very strong year to date. Lam Research up 27%, Applied Materials 24%, and KLA Corporation up 27%. So that whole subsector, semiconductors, obviously has been the focus today because of the Taiwan Semiconductor result, but there's this whole raft of other stocks out there in the equipment and materials sector, and that is one that you should have a look at in your investing today. One of the stocks that reported today was Blackrock. Blackrock is the biggest fund manager in the world. It jumped 6% today after its result, which was a very good result of earnings per share of $13.16 compared to last time of just under $12. So an increase of over $1.20 odd earnings per share for the quarter, which was a great result from Blackrock. Blackrock, as I said, is the biggest fund manager in the world, and they reported that funds under management has increased by 22% in the past year, and is now above $14 trillion funds under management. We compare that to something like NVIDIA as a market cap. NVIDIA has a market cap of just over nearly 5 trillion, sorry, and so funds under management for one fund manager is huge, 22%. So it's really welcoming the CEO Larry Fink's transformation into a do-anything fund manager. It not only has private clients, high net worth clients, a lot of funds, but it's also in the private markets, and it is the biggest provider of exchange-traded funds. Revenue was up 23%. To 7 billion for the quarter, and if we think of the ETFs, the things like ETFs, iShares, IBIT, and various others with an I in the beginning of it, all the iShares are developed by BlackRock, and therefore that's why that market or that stock has rallied. It's a great stock and something to look at. Focusing on Australia, interesting news overnight. James Hardie is deemed to be looking to close some of its US businesses. The Aussie Building Products Group fell 36% last year and hit a 5-year low, mainly because of the slowdown in the US housing market. But there's new optimism, and this consolidation of US operations will help. The stock is up 13% a year, 30% this year. It is rated a buy by analysts, and it has a forecast to grow revenue this year by around 16%. So have a look at those stocks today, and enjoy your weekend, and good luck with your trading. My name is Greg Boland from Moomoo Securities. Thank you.